What's going on, everyone? It is Paul, the 920 trader with 920 Trading and Trading Dakota. Today is Thursday, February 21st. Wednesday, February 21st, 2024. Don't know why I said Thursday, but today is, in fact, Wednesday, the 21st of February, 2024. And this is how we traded SPY today. Now, we had a couple of different things that were going on today. Number one, we had FOMC minutes. So FOMC minutes came out at 2 o'clock Eastern today, followed by later, and it hasn't happened yet, but it's getting ready to happen in the next few minutes, NVDA earnings. So those things both have the potential to move the market in a really, really, really big way. Don't know what to expect out of NVIDIA. Really didn't know what to expect out of the minutes. So when they read the minutes, it's basically an inside baseball look at what they talked about 3 weeks ago during the FOMC meeting. Now, they give us the highlights when Jerome Powell comes out and speaks the day of the FOMC meeting. But we kind of get that in-depth look at what they were talking about during the meeting. Again, that was 3 weeks ago. So let's take a look at what we got. So I'm looking at different zones today. I'm looking at pre-market high sitting at 496.31, pre-market low. As of 8:30 this morning, this did prove to be our 494.90 down here, pre-market low. Looking at a couple of different zones too. Looking at a 30-minute zone right here at 495.88, a 15-minute demand zone, 495.66. 5-minute intraday double bottom. So this is going to happen intraday. So let's pay attention to that level 2, 495.11. I also wanted to look at a zone low and a zone high. Okay, so I've got this 494.56. I've also got this 15-minute resistance up at 496.73. And if you're watching my screen right now, you can see what price action is doing. This little line right there. That is what's happening. Got about it's about 13 minutes after the hour right now, so they are still actively trading. But anyway, this is how the day shook out. Now, the reason I put this pre-market low as of 8:30 because I had to leave and I had a couple of meetings this morning, had to get taken care of, so I was not able to trade early morning. So let's see how it shook out. Bounced around a couple of first plays. Now, again, no cross to the upside, or the downside. Had this cross to the downside in pre-market. So again, we're not going to play that. I wasn't here to trade it anyway. First cross was just a really, really baby cross to the upside. Never got a green candle. And again, we're probably looking at this 495.65 to the upside to breach and hold above that to feel comfortable in calls if you're not taking calls off this 495.11 back to the downside and then running it back up to this next level. But again, it's 920 traders, multiple ways to play it. But again, I didn't trade any of it. Didn't trade any of this. Didn't trade this to the downside. Obviously, I was not here to take anything to the downside or back to the upside. And I missed some plays because, again, I was at meetings. Touched this level in here. Had a really, a decent little run up here. Got to our level 495.98. Got a little bit above that, up to about 496.06, which was at that time, obviously, the high day. So 496.06. Nice cross to the downside. So anybody who caught this cross to the downside, it was a really nice play back to the downside. So, 95.80 down through 95.11. You picked up about what? 65 or 70 cents on that play if you took it to this next level down. Now, we got through this 65 level, kind of stopped for a minute or so, a couple minutes at the VWAP. And then once we got through that VWAP, we went down to our next level. But again, I wasn't in on any of this because I wasn't available, and that's okay. It just happens. Now, really, really nice play to the upside. Nothing here. Second cross to the upside. And for those of you that caught that, excellent play. Now, look at exactly where it stopped. Pre-market high, 496.31. Folks, these levels mean things. They're always important. So let's say you took this golden cross to the upside. So I don't know where POC was at this time. I would imagine it was somewhere close to this. So we got a cross to the upside, 920 VWAP and the POC all on the same candle. It's called a golden cross to the upside. When we do it to the downside, it's called a death cross. Now, some people use a 50 SMA or a 200. But for me, that's what I'm looking for, back to the upside, a golden cross. Got through this level and again got up to that 496.31. Now, here's the thing. I have people ask me, They said, why do you want to sell your position when you hit that level? Well, the answer is actually quite simple. If you get, so let's take this candle right here at 11:15. So 11:15, if we take this candle and we breach this to the upside, we will then use our level right here, 496.31, as support in hopes of getting up to our next level. If we just kind of touch it to the upside, consider taking your position off the table. We want strength through our specific levels. And if we can get strength again, we're still going to use that 9. I mean, the basis for what we do is obviously support and resistance, but we use that 9 to get us where we want to go, both to the upside and the downside. But if we fail to get over and hold on to a specific level, take the trade off the table. What you can always do is, if you a couple candles later, if you get a breach to the upside, you can take that as a continuation play and use that level as your support, let your 9 catch up to you, and then take that back up to your next level. So anyway, that's just a little bit of information on the 920 strategy, which can be found. All the information is available at 920trading.com. Go check it out. All the information is there. Again, to the upside, nothing. Again, I wasn't here. I saw this. I was actually driving when I saw this play developing. And man, what a good setup. So across back to the downside, bounced off this 15-minute demand zone up to this 30-minute supply zone. Had this almost beautiful double cross to the downside, and look what it did. I mean, it was a beautiful, beautiful, beautiful play to the downside. Again, didn't catch it. And that's okay. That's just kind of the way it shakes out sometimes. The one thing that I don't want to do, I don't ever want to do, is I don't want to chase plays. I want to take plays at a specific level, and I want to have a specific reason for getting into a play. So you should always have a specific reason for getting into the play and a specific reason for getting out of the play. Nothing in trading should be arbitrary. Well, I think it's going to go up, so I'm going to put on a play right here. No, you wait for the market to tell you when to get into the play, and that's going to be based on your overall strategy and your process for getting into and getting out of trades. So again, nothing to the downside. It would have been a banger, but again, I wasn't available to take it to the downside, push this back to the upside, another run to the downside, pushed it back up through VWAP. So we got to cross down. We got to cross back to the upside. Nice little cross to the downside. Now this candle right here, I think it was about a 70-cent candle. So 52 down through 97. So you got a 51-cent candle, 52-cent candle, somewhere right around in there, maybe a little bit more, 55-cent candle. Folks, if you're taking a position on a 55-cent candle, you must know exactly where you're going to get out. It was a beautiful double cross to the downside. Now, so the argument against taking this candle right here at 1301, the argument, number one, the argument for taking this play is, well, you got through VWAP, you got through the 9, you got through the 20, and you got through this level of support, 495.11. So the argument for taking that play is you got through all those 4 different things, the VWAP, the 9, the 20, and the level of support. The argument against it is it's a big candle. It's a 50-cent plus candle. If you're taking a position on a 50-cent plus candle, know exactly where you're going to get out if the play goes against you. Now, if you were to take this play right here, because we have this old support, new resistance line above you, directly above you, this is where you stop. So let's say you take this candle right here, you wait for the close, get into the play, it turns around, goes against you back to the upside. Consider getting out of the play at that point. But again, a 50-cent candle is a big candle to take a position on. Again, that is just my opinion. And it's just kind of how I trade. 30-cent candle, yeah, maybe 50. Probably not. Okay. So we bounced around, caught this supply zone down here on this 30-minute level, picked up buyers in this supply zone again. Demand zone. Got a demand zone low, supply zone up high. Demand zone, they're essentially saying, you know what? I want to buy at this specific level. I think it's on sale here. I think this is a really, really good value to get into a play. So you get into a play right here, and then you run it up to a supply zone. They're saying, okay, if it gets to this level, I want to sell this position. So that's when we're talking about supply and demand zones. Supply zones are up high, demand zones are down low. Okay, so nice cross to the upside, nice little bitty cross to the downside. Just kind of bounced around. I know a lot of folks kind of got beaten up in this area. There were some plays to take, no question about that. This probably being the best setup, one of the best setups of the day. To this point, absolutely the best setup of the day. Again, bounced around, going between levels. So if you're just going level to level, hey, take your calls off support and then, take your puts off resistance. Okay, so again, bounced around. And at this point, I'm thinking, okay, let's see if we can get down. Had a nice cross. Again, death cross to the downside. I was just getting back and I saw this setup and I said, you know what? If we can breach this 495.11 to the downside again, like we did over here at about 1 o'clock, I'll take it back to the downside. It was in this play for just a few minutes. At that point, I said, you know what? We're getting close to the report. The report was coming out in just a little bit. Take the trade off the table and see what happens. Now, this particular play retraced back up, came back down, took out this 30-minute zone down below, ran back up. So a nice fishtail play off of support, back up to that next level of resistance, breached, and then rejected off of that a few minutes later, came back down. Oh, here's where the fireworks start. And I've got a nice little story about this play right here. So the report came out. Where did it come out? Right in here. So the report was coming out right in here at, it came out at 2 o'clock. So it came out closer to over here. So the report came out over here. Nothing new in the report. Okay, so we bounced around, came down, made this low, got through this 30-minute zone. And I kind of thought at this point, we had a little gap on this candle right here. Filled the gap a couple minutes later. Again, we've got a 30-minute demand zone down here. So I'm thinking, you know what? If we can get up, if we can breach a couple of levels, I'm going to put on a trade. I didn't really trust anything until we breached this level right here. So this 494.56. So I opened up my brokerage, getting ready to put on the play, getting ready to press the go button. And guess what happened? It crashed. TOS crashed on me. Thanks, TOS. I appreciate you very much for crashing on me. It happens every now and again. Kept me out of a big play. But folks, we miss plays all the time. It happens. I would have loved to be in on this play, but I'm not going to chase the play. This was my entry right here. I could have said, okay, I breached this right here. But at this point, it's like, okay, are we running a little bit too much for me to get in? And I'm thinking, okay, don't break your rules. You breached the level that you wanted to breach to get into calls. Yeah, you could take, you've got safety in the next play. But at the same time, my rule specifically says you got to know where your entrance is. And if you don't hit your entrance, you are not going to chase the play. Do I miss out? Yes, I do miss out. But let me ask you this, folks. How many times have you gotten into that play after that train is already going? Now, you could say, yes, it's going up to this point. Yeah, but I breached this, and I breached this resistance over to the left. I got to close above this level. That's what I was looking for. And it would have been a really, really nice trade. It would have been a nice trade. Now, again, how many times have you put on that trade after the run? So it's going in your direction, you missed it, and you say, you know what, I'm going to put on this trade. This is a good place to put on the trade. If it reverses, oh well. You put on the trade and it immediately reverses and you end up a big loser on the trade. If that's you, nod your head or raise your hand because, hey, I guarantee it, folks. It happens to everyone. You get that FOMO, the fear of missing out kicks in. And you go, I got to get in. And the answer to that is no, you don't. Trading is like a bus, folks. If you miss a trade, another trade comes along. It may not happen the same day. And you may watch that thing take off and go without you. And that's okay. And it has to be okay, folks. You have to be okay with missing the plays if you miss your entrance. It just happens. It happens. Yeah. So anyway, that's how she played out. She just kind of bounced around. Look what she did throughout the end of the day, folks. Again, I missed a massive play to the upside. Did I want to chase it? Was there a certain part of me that said, you know what, get on this thing? Yes, there was. The emotional part of my brain said, jump on this moving train. But then the logical brain kicked in and said, you've done this before. And you've You've done well on this before, but you've also been hurt on this type of play. So, folks, it's better to miss a play. I've said this before and I'm going to say it again. I'll say it right now. It's better to be on the ground. Let's say you're a pilot. It's better to be on the ground and wish you were in the air than to be in the air and wish you were on the ground. Folks, it's like flying an airplane. Trading is the same exact way. You're going to get more trades, and we are not reliant on a single trade, but rather a trade by trade basis to make it as a trader. So don't chase trades. If you miss the entrance, stay out of the trade. And again, that's just my opinion. That's not financial advice, but please take it from people who've been there before. You get that FOMO kicks in, you jump in on the trade and immediately reverses. The worst possible thing that can happen to you, the worst thing that can happen is if you break your rules, you make money. That is the worst possible thing that can happen because that will incentivize you to break your rules in the future. You don't want to do that, folks. Do not break your rules. Stick to your trading plan. Again, missed a big one. It happens. Oh, well, the market's going to be there tomorrow. How do I know? Well, the market's there every day. It's market's there every day. So, folks, that's how we did it today. I haven't looked at NVDA earnings yet. I'm getting ready to look at NVDA earnings here pretty quick, see how it did, or see how NVIDIA did. But thanks for spending a few minutes with us this afternoon. Now, if you enjoy our content, please go ahead and like and subscribe. And don't forget to turn on your notifications. Leave us a comment. That'd be great. Share with your friends and your relatives. We would appreciate that too. Now, if you are interested in live daily trading, so every single day from bell to bell, we do live daily trading at our Trading Decoded Discord. The link for that is down below, so go ahead and check that out. We're going to give you that first week for free. Now, if you're interested in the 920 crossover trading strategy, head over to our website, 920trading.com. All of the information is there. There's nothing to pay for, folks. It's all right there. You got a question? Send me an email. I will be happy to respond to any and all questions via email. Not a problem. So again, thanks for spending a little bit of time with us today. We certainly appreciate the fact that you do that. I hope everybody did well today. But above all else, I hope you followed your trading plan. So I hope everybody has a great rest of the day. We're going to do this again tomorrow. So have a good one, folks, and we will see you in the markets.